Hi everyone, it's me Maria Stardup and you're watching a recap of the crypto market for the week of July 2026. American Stock Exchange Nasdaq halted plans to launch a cryptocurrency business, citing an uncertain regulatory backdrop in the US. That sentiment was especially evident after the court ruling in the Ripple case and the second party's intention to appeal it. Also, eccentric billionaire Elon Musk announced a rebranding of Twitter. Furthermore, the cryptocurrency market saw whales selling off their holdings, often multi-year ones, at a record pace. Thus, a dormant wallet containing $31 million in Bitcoin suddenly came to life after remaining untouched for more than 11 years. Its holders sold 1,037 coins and earned an astronomical sum. Notably, the anonymous investor obtained the number one cryptocurrency at around $5 per coin. The total profit amounted to nearly 600,000%. In May 2023, after 8 years of dormancy, an address containing 8,000 Ethereum generated $14.7 million. In April 2022, unknown investors withdrew 250 Bitcoin worth $6.3 million from 5 wallets inactive for more than 12 years. The coins were valued at less than $1 at all the time of purchase. Such stories are like fairy tales, however, this reality. The range of new possibilities is expanding in the crypto industry. At the same time, the number of cyber attacks is growing as well. The hype around a crypto asset increases potential gains, but makes it easier to fall into a trap and lose everything. A vivid example of such euphoria was the dynamics of the crypto market after Twitter CEO Elon Musk unveiled a rebranding of the social media giant. The billionaire introduced a new logo, the single letter X, to replace the famous bluebird. In the wake of this announcement, several coins have emerged promoting the X ticker with the anticipation of capitalizing on the resulting hype. They include X, Xcoin, Xtoken, and others. These assets have recorded massive pumps and dumps. For example, Xtoken surged by over 1,000%. Back on Sunday, this obscure coin traded at $0.402 with almost zero trading volume and liquidity. On Monday, the cryptocurrency kicked off the new week already at $0.3025 with trading volumes reaching $50,000. Interestingly, some experts attribute the emergence of these fake coins to the dormant process of the main crypto assets, Bitcoin and Ether. According to them, the prolonged period of their low volatility has forced investors to explore alternatives promising quick and good profits. And in July, Bitcoin traded in the tight range of $28,000 to $30,500 amid zero trading activity in the market. The world's main cryptocurrency spent the previous trading week near the psychological mark of $30,000. From Monday, July 24th to Wednesday, Bitcoin traded sideways below the resistance level of 29,500. In other words, there are two main trends regarding Bitcoin. On the one hand, traders prefer to avoid risks. On the other hand, there are more and more calls to sell the digital currency. Some analysts believe that a breakout of $30,000 signals a bearish reversal. Bitcoin is also unable to rise due to an uptick in the trading activity of whales in recent weeks. They have been locking in profits and selling off the asset at a record pace. This whale dominance accounted for 41% of all exchange inflows. For comparison, after the bankruptcy of FTX crypto exchange, this figure was only 33%. Perhaps the main reason for short selling is the tightening of crypto regulation in the United States and the crackdown on crypto investors. The trajectory of Bitcoin depends on the economic indicators and the movements of the US dollar. If inflation continues to rise, the aggressive tightening by central banks may undermine a rally of Bitcoin and other risk assets. Yesterday, the Fed raised the key rate by 25 basis points. Jerome Powell warned that the forward guidance remains unchanged as the committee leaves the door open to further rate hikes if inflation does not continue to trend lower. It's certainly possible that we would raise the federal funds rate again at September meeting if the data warranted, and I would also say it's possible that we would choose to hold steady at that meeting if that was the right policy call, Powell said. The US dollar has no drivers for growth. On Wednesday, it was stuck at 101. The hype around Ripple has also subsided. The rally of XRP is losing momentum rather quickly. After several unsuccessful attempts to break above the resistance level of 0.85, investors also switched to profit-taking, while investors spent the last 3 trading days offloading 320 million XRP coins. After soaring to record highs following the victory against the US Securities and Exchange Commission, Ripple fell below 0.70. At the end of the week, it was trading not far from 0.72. Ether also incurred losses last week. It dropped to the weekly low and the support level of 1,836 from the resistance level of 1,927. 10 months have passed since the Ethereum network adopted a proof-of-stake consensus mechanism. Throughout all this time, Ether has been unable to regain momentum versus Bitcoin. Moreover, it was affected by a crackdown of US lawmakers on the crypto industry. Bitcoin did not face any pressure from regulators. Therefore, Ether logged one of the worst weekly performances. It has been consolidating in a narrow range of 1,840–1,880 since Monday. It is still trading below the psychological important level of $1,900. That is all for now. Remember that having the latest market news at your fingertips can help you multiply your profits significantly. Hit the subscribe button and leave your comments down below. See you!